All right, welcome back to the Tech Corner. I'm George Tsilis, Senior Markets Contributor here with the Schwab Network. Thanks for being with us once again. On this week's Tech Corner, we're going to be covering Coinbase. Now, Coinbase operates as a platform for crypto assets in the United States and internationally. It offers primarily financial accounts for consumers in the crypto economy, a brokerage platform with a pool of liquidity across the crypto marketplaces for institutions, and a suite of products granting developers access to build on-chain. The platform serves three major groups: consumers investing in crypto assets, institutions like asset managers and banks, as well as developers building decentralized applications. The company's operations are grouped into two primary revenue streams. First off, transaction revenues, which includes retail and institutional spot derivatives tradings, as well as subscription and service revenues, which include stablecoins, staking services, institutional-grade custody solutions, and developer products. Revenue also benefits from partnerships like the Circle Agreement for stablecoin growth. Now, when it comes to competition, primarily from other leaders across the crypto trading and fintech space include Binance, which covers broad assets, including high share of global trading volume, and Kraken, which focuses on security and comprehensive pro tools. Now, when it comes to unique value, Coinbase differentiates itself through regulatory compliance, security, and a user-friendly interface for both novice and advanced participants. Recent strategic acquisitions and investments such as Deribit and CoinDCX expand capabilities in derivatives and global markets as well. Combined with a comprehensive product suite and regulatory alignment, these pillars form a strong foundation for sustained growth and market leadership. Now, in most recent news, Coinbase actually said recently that it has filed with the U.S. SEC that the company will leave Delaware and reincorporate in Texas. The company added that its board approved and recommended the shareholders approve and adopt the reincorporation. Now, going back to late October on the 30th, the company actually reported Q3 non-GAAP EPS of $1.44, which posted a 27-cent per share beat. Revenue actually grew and beat the estimates at $1.87 billion, up 54.5% year over year. Breaking it down, transaction revenue was over $1 billion, up 37% quarter over quarter sequentially. Subscription services were also higher by $747 million for the quarter, up 14% quarter over quarter. The company also highlighted continued progress on strategic initiatives, including the acquisition of Deribit, which enhances crypto derivatives, leadership, and institutional economics, as well as the strategic investment in CoinDCX, which broadens its international reach. Lastly, the partnership alignment with Circle Corp continues to support stablecoin growth with subscription and services. Now let's take a look at some of the other positives for Coinbase. First off, the acquisition of Deribit strengthens position in crypto derivatives, supporting these institutional transaction margins and reinforcing Coinbase's leadership. The other strategic investment in CoinDCX and the growth of stablecoin and subscription revenue streams provide recurring revenue, more defensive income against market volatility, and of course, drawdowns in the crypto space. The transformation into core infrastructure for digital finance, backed by regulatory clarity and higher margin services, positions it as a leader in the evolving crypto landscape. What's also more important is the company is profitable and growing both sales and earnings at a rapid clip. For instance, the forward estimates for revenue in the next 4 quarters are near 41%, which bests the 5-year average by more than double, which was 21.5%. EBITDA growth is also expected to be over 56% of sales. That's compared to a EBITDA loss or a contraction on a 5-year average of down 1.8%. Now, despite some of these positives for Coinbase, we also have to highlight some of the concerns. First off, there are some valuation risks. The company actually has a high earnings multiple compared to peers and rising operating costs due to acquisitions and maintenance of technology. If you look at the forward PE ratio of 38 times earnings, this is quite a bit higher than the sector median of 10.87. However, it's more in line with its 5-year averages, which are around 41 times earnings. Other risks to consider is cyclicality. Reliance on crypto trading volumes means downturns can compress revenue given the business's pro-cyclical nature. Competition and costs are also something you have to consider. Combined with increasing expenses and margin compression, introduces fundamental risk to longer-term outcomes. Now let's take a look at the technical picture for Coinbase. First off, the current technical condition, unfortunately for Coinbase, is weak, down approximately 35% from the year-to-date highs published back in mid-July of 2025. Although the stock has pulled back from recent higher prices, Coin remains susceptible to lower prices and remains in distribution with low momentum and relative strength compared to the S&P 500. Looking at the MACD histogram and RSI, we can see that there's still some momentum and relative strength weakness. The stock has underperformed the market when compared to the S&P 500 over the last 60 trading days. And while the 50-day moving average is still pointed up, the stock is trading below this important support level, which is bearish. Coin could find secondary support, however, at its rising 200-day moving average, which is near the current price. Now, in summary, Coinbase intends to leverage a complete trusted platform spanning consumer access, institutional prime brokerage, custody, and developer tools, while expanding higher quality subscription services revenues such as stablecoin, staking, and custody. Stablecoin and subscription revenue is rapidly expanding as I posted the numbers for quarter-over-quarter growth last quarter. Perhaps this is providing a hedge against the crypto market volatility and boosting recurring income for Coinbase. Strategic moves in derivatives and international expansion reinforce its leadership as well. Although valuation remains elevated and revenues remain sensitive to crypto cycles and competition, the combination of regulatory alignment, an easy-to-use platform, and growing recurring revenue base supports a constructive though balanced outlook. Well, that's it for this week's edition of the Tech Corner. Please join me next week. We're going to be covering semiconductor powerhouse, Taiwan Semiconductor. Now, don't forget to like and subscribe to the Schwab Network. I'm George Tsilis. We'll see you next week.